welcome to another episode of the Project Egg Show. I'm your host, Ben Gothard, and today we have the honor of speaking with Henry Yoshida. How you doing today, Henry?
Hi, how's it going? Greetings from Texas.
Well, I'm so excited to chat with you today. I know you're in a special building, so I want to hear about that, and then we can jump right in.
Yeah, so this week, last night was the Capstone event. So I'm in Austin, Texas, and I'm actually one of our investors is an organization called Capital Factory. So they are the largest startup accelerator entity in the whole state of Texas. And then the Capstone event was the whole week. It's ATX Startup Week. I participated by sort of curating content in their locations here. They have 4 floors of a downtown office building in Austin now. And I'm actually on the floor that is sponsored by the U.S. Army. So they have tens of millions of dollars that they want to put into a defense innovation fund. So they have this really cool, I can't take you around to see it, but sort of a Marvel Avengers themed floor, which was sponsored by the U.S. Army. So the conference rooms are named Black Panther and Iron Man and Captain Marvel and so forth. And then I curated the fintech track, which is what I do. And I had the privilege of interviewing, sort of like what we're doing, 2 founders, entrepreneurs of some rocket ship companies. One has raised $100 million in venture funding from California in the last 12 months. The other has raised $350 million and actually got to a higher valuation faster in Y Combinator than Dropbox and Airbnb, a couple of names that you may have heard of out there. So it's really neat to be able to suss out their, founder stories this week here.
That's amazing. Well, please give Iron Man and the rest of the Avengers my regards.
Yeah.
And to jump into it, I really want to learn what is your story?
So I guess going way back, we talked about this before going live. I'm a native Texan. Probably don't look much like that, but my parents immigrated from Japan. Before I was born, my brother and they ended up in Dallas, Texas. I grew up suburbs of Dallas. It's a great state to live in, great state to grow up in. And I think at some point in the past, the Cowboys were a great team to watch too when I was a kid growing up. Tougher nowadays, but and for me, my parents had just worked in sort of the service industry and restaurants. And we kind of grew up and just focused mostly on education, ended up coming to UT. And for me, becoming an entrepreneur, it's interesting. I went to school to go get the big corporate job, but I happened to graduate in the middle of the internet bubble bursting. So for those younger listeners, there was actually a recession at one point, and this was the one before the one that you've probably heard stories about from 2008. So this was in the year 2000. And I was living in Austin because I went to undergrad here and ended up working at Merrill Lynch, but it was a pretty tough time to go work at Merrill Lynch. And for me, I did, like a lot of entrepreneurs, a big stint in corporate America, which I think that's always a healthy thing because it kind of gives you a sense of where big companies are just not seeing, where opportunities are. And even if they did, I don't think they could do much about it. And then if you're, the person that has enough guts, you might be able to strike out on your own and see if you can go solve that problem. And if you're really lucky, come full circle and maybe sell it back to them. So become an employee, leave. So you're a former employee, build something and then sell it back to them, at which point you're an employee again. So
full circle.
Yeah. So that's kind of how I started. So it was a corporate life for me right after college that sort of gave me a path from a career standpoint. And I was just someone who was maybe a little bit intellectually curious, probably too much so for corporate America, but kept eyes wide open enough to just see some opportunities and have since built a couple businesses. So first management consulting, and then more recently financial technology. And now I'm on my second one for that, but I'm sure we'll go into much more detail about those and sort of how I got to be.
Absolutely. So I want to dive back into your history a bit.
Sure.
When you're talking about the importance of education, what were those conversations like? I mean, were you thinking, okay, I know exactly where I want to go, exactly what I want to study, and I know exactly what I want to do? Like, how did that conversation actually happen?
Yeah, I think about this a lot with my own children now, because I'm someone who has the benefit of growing up here in the United States. For my brother and I growing up, it was interesting. My parents worked in restaurants. So education for us was just kind of doing well at school. We had no real direction. And I'll tie it back to myself in a second, but it's because my parents were new to the country. So in a way, they didn't know any of the ways of the country of the US. So I remember, sort of early memories that kind of got me into finance and money was that some of my friends, when they were in middle school, so like 12, 13, 14, had a vague idea of what a mortgage was. But I had no clue what the word was. And Google, of course, didn't exist then. And just remember thinking that, my parents had one, but, they weren't native English speakers. So they didn't really have a way to communicate and help me understand at the age of, let's say, 12, 11, 10, or 13, what that actually was: a loan against the equity in your home provided by a banking institution, and so forth. So the path I ended up going down was not because, my dad was, let's say, doing this professional job, and, I knew that I didn't want to do that, for example. But I kind of was always driven by, well, there's a lot of things I didn't know. So the way we found out information was mostly magazines, and that's how we developed interests. I mean, the main thing, no one really aspires to try to go work directly inside of a restaurant as a service employee. So that's how we learned. And I ended up going into business and finance, and actually it was politics first in college. I wanted to go to law school. Was the one thing that I sort of always went back to was it seemed like the most successful people in the country were the ones that wrote the rules. Those tended to be lawyers. They tended to be business people. Those lawyers disproportionately represent political offices. So that was the path I wanted to go down, because I just thought that I have no idea what that really means to be a lawyer, but it seemed like the most successful path was, if you're the person making the rules, it seems like have a leg up in winning the game of life, of business, of just sort of living and so forth. So education for me was kind of having to be exposed new and not really having any sort of like mentor type figures to teach me. So learning about sort of various things like mortgage, I remember, is just one of my early money memories. I had no clue what people were talking about. I remember thinking I need to look this up, and that's how I sort of learned about that, and pretty much everything else through middle school and high school. And then in college, I didn't know things like, hey, you need to go into this major, which leads into this career track, which leads into that job. I just kind of figured it out along the way. But, met a lot of friends, went to the University of Texas, and then ultimately, kind of chose my path through there. So that's the early formative education part. And it was really different because you may have a lot of people on the show that say that, well, I met this one person that really taught me what it meant to be a doctor or a banker. And I remember thinking, where I grew up, I didn't know any of those people. So my closest sort of knowledge of who those people were might have been through like sitcoms back in the day. So there was a time when you didn't actually get to pick what you watched on TV. TV was just kind of what was on at night, and there were only 15, 20 channels, and so forth. So yeah, that's a little bit about sort of my educational upbringing, and I just it was more competitive than anything else. I just wanted to be good at it, but I don't know if I had any specific direction I was working towards, other than just maybe trying to do well from a grade point standpoint.
It's so fascinating to hear you say that, and specifically the piece about figuring out what the game was and trying to win it, because that's exactly how my mind thinks. I'm like, okay, what's the game? Let me figure out the rules, and let me just figure out the best way to do it. When you were growing up, and it seems like you recognize that about yourself now, did you know that about yourself then? And how did you really understand how you operated, and how did that actually manifest itself in that moment of, okay, let me figure out the game?
I don't think I did at the time. I mean, there was always a sense of, I think what's interesting, and it definitely happens more today, but, there's a lot of people growing up in America today, and maybe their family doesn't have a really long history of being sort of integrated into the culture. And those people growing up that way have a different perspective. So I actually kind of appreciate the perspective, and sometimes feel a little bit sad that my own children are probably not getting that as much. I don't know if I really looked at it that way. It was just always having the sense that you didn't 110% fit in. So,
Mm.
and not that it was a bad thing, it just made you think differently. I think instead of thinking of it as a disadvantage, it was actually just growing up with the ability to think with different perspectives, which helps you in work, helps you in life, helps you as a parent, a business person, and so forth. Like, building a business. Usually the way to build a great business is that you have to sort of imagine what the customer perspective is and then reverse engineer that into the product or service. And in some weird indirect way growing up, although I didn't ever consciously think about it then, maybe that just sort of ability to think through or see through two lenses at the same time was very important for me in just the way that I approach things today: conversations, meetings, transactions, work, relationships, and so forth. So
when when you're telling the story there, I believe you mentioned that the reason that you wanted to go into the law, finance, and politics space was because you got to set the rules, and it seems like the ones who set the rules are the most successful. Why was success important to you? I was going to get more context, but
yeah.
yeah, why was it?
Well, I guess success wasn't just the goal. It just seemed like that you had a lot of flexibility in what you wanted to do if you were someone who was studied in the rules. And the way I thought about it is that I think I'd remember thinking about some stat that maybe low single digit percent of people are law school graduates, yet it's something like, at the time, maybe 15 years ago, it could have been 100% of Congress. Less so now, but still over 50% for sure. And that's no different than any state legislature, Louisiana, Texas, New York, and so forth. So I don't even know what law school was or how to become a lawyer. I didn't know the track and those kinds of things. But actually, I remember reading in high school a book called 1L, which was written by an author named Scott Turow. He'd written mostly fiction books, but one of the books he wrote was 1L, which is the term for a first-year law student, that just described his time in law school. And that's the first time I'd never met anyone that had been to law school at that time. So then I'd learned, it's a 3-year program. After the first year, it gets a little easier, but your job is to maybe go get a summer associate job or clerk with a judge. And that's kind of a paid internship that might lead into where you work post graduating from law school, at which point then you only study one type of law, and 20 years later you actually know nothing about general law, but you might know a lot about this one particular esoteric part of the law, and that's kind of the career path of a lawyer. So it's the way I approached a lot of things. And I'd never been outside of Texas, so one of the things I did in college was I took a year off to do internships, which to me was not really figuring out as much what I wanted to do for a job, but just a sort of an excuse and a way to afford living somewhere outside of the state. I mean, as much as I liked it here, I'd never really been outside and lived in another city. So I did that too. And that's when I explored things like politics, just to understand how it worked. I never had the end goal of this is how to become successful. It just seemed like there's a lot of things you can figure out what to do if you just happen to be closer to the rulemaking part of it. That was just a weird theme that I had in the early part of my life. And then now I speak to you as someone who's never had a law school class in his life, never went to law school. So life took me down a different path, and it was mostly economics. Just really couldn't afford it, so I had to go get a job. And then maybe one day in retirement I go to law school for fun. When I'm done doing stuff.
Let's talk about that transition.
Yeah.
When did you really make the decision or maybe come to terms with the situation you were in, and decide, okay, I am going to get a job, that is my path? And I'm really interested in specifically the decision-making process.
Yeah. Well, so for me, I had done my undergraduate days. So this is, late 90s, graduating in 2000. I had done my undergraduate studies geared towards going to law school. The year I took off was actually me going and working for a legal internship in DC, but then also doing another one, which was in politics. So it's on my LinkedIn profile, but I spent 7 months as an intern at the White House in the late 90s for President Clinton. So it's kind of a famous time to be an intern in Washington, DC. But when I came back, it's when time came to sort of make that decision, it was 3 years more of school at a very high cost and not a lot of availability to get funding to go, even in the form of loans. So then I decided that the next best thing was instead of the rules that kind of govern how society works, there were also another set of rules, which were how money was governed. So I thought finance was a nice place. But my undergraduate studies were never geared towards business. So the way that I could get into finance was working at the retail branch office for Merrill Lynch. So that's how I thought I could always go in, get the licenses I need, and then maybe transition over to other parts of finance. But at least it was an entry point for me, which was kind of working with just regular retail clients and managing money for regular individuals. And I was pretty fascinated with that too, just because that was another thing that I kind of felt like my parents didn't really know about. You know, they didn't know about the U.S. stock market, the New York Stock Exchange, and so forth. So that was another different set of rules that I kind of felt like actually was better than the societal governance rules, where people can really, if they understood how money worked, then they could, you know, do well in life too, or, you know, just have a lot of options again. So I went and worked at Merrill Lynch, basically right when the recession was starting, which again gives you perspective. It's actually that recession at Merrill Lynch and the decision-making process for how I thought, hey, I could go here, get a job, maybe make some money, and then go back and go to law school. So I wouldn't just have to borrow the money and go destitute and broke doing it. But I ended up sticking with it, even though I came into it at a bad time. Instead of working with individuals, the only way that you could survive at Merrill Lynch in those days was no one wanted to give a $500,000 or $1.5 million brokerage account to a 21-year-old kid. So the way that I survived was I pivoted from working with individuals to helping small business owners and entrepreneurs. So I've always been around entrepreneurs, even in my corporate days, and helping them set up their first 401k plan and so forth. So that's what I became known for here in the Southern United States, then later out towards Colorado and California. And I did that for 10 years at Merrill. But I just think to myself that I would have been no different than probably any financial advisor that might be listening to the show today or watching the show that you might know in your area or I know in mine, that works with typically people on the cusp of retirement and how do they develop a financial plan. But instead, I became the individual who was there with a financial product from a consulting standpoint, as people were typically starting a very important new chapter in their life, which was a new business that had gotten to a point where, okay, it's no longer me and two other folks anymore. For me to go get Ben, I got to have some real big company benefits, or at least a scaled down version of those. And then I was hired to do what I like to say the investment-based benefits, and then someone else was usually hired to do the insurance-based benefits. And this is what I became known for over the years. But it was cool because my education then turned into, I had dozens, and you know, as I got further at Merrill, hundreds of entrepreneur clients. And then I just became ultimately interested in how they made money. So I was curious, how did a HVAC repair company make money? How did a landscaping design company make money? How did a small law firm make money versus a big law firm? So I started learning like equity and income partners. And it was funny because most of the ways I developed the relationships had nothing to do with what product I was selling. I think I was just the only person that had ever asked this budding, burgeoning entrepreneur, why'd you do this business of all things? And so no one ever asked them those questions, and so forth. So that's how I got clients, by offering 401k plans to those businesses, some of which got really huge. So I kind of, wrote it up with the entrepreneur. Maybe in hindsight, I would have been better as an investment banker, if I had the chance to put some money into those companies instead of just being the consultant, paid a fee. But that was the path of how I got to what you see in the bio and what I do today and so forth. I started down that retirement plan path. maybe thanks to the internet bubble bursting in Silicon Valley and then spreading to the rest of the country, timed alongside when I was graduating, after I'd made a decision that I couldn't incur 3 years more cost in the form of education, and then kind of taking me in the path I chose in financial services away from probably what most people do. And that became my niche, my sort of what I was known for was the small business retirement guy in this area of the country. And I did hundreds of them. So setting them up.
So it seems like your curiosity and the desire to learn about these other businesses and really figure out what their story was is how you initiated that relationship and created that bond. And then from there, then they became your clients. But it seems like that angle was really how you connected with them.
Yeah, well, it was, and maybe in a way I was just more genuinely interested for my own personal benefit at the time. But I'd kind of viewed that the product that I was selling was something that they were going to need at some point in the evolution of their own business. And there wasn't really any differentiation. It was a relationship sale. And in the early days, everyone wants to sell some service to a small business, but the business itself doesn't have the money to procure those services. And then when the business gets really big, that's when everyone starts wanting to be your friend, because now you have a lot of resources and money to buy both services and get recognition. So in those early days, I didn't come across as the person trying to sell them anything. I came across as the person that genuinely wanted to know, because no reporter was asking, how did you build this 4-person business? Typically the local paper or business journal isn't beating down your door to ask you that question when you just started. They will when you hit 4,000 employees. And here I was, this young guy, just basically saying, oh, how do software companies make money? I mean, you develop the software either in-house or with offshore developers. And then the idea is they would want to sell licensing fees with servicing contract. I mean, these are things that, quite frankly, I doubt that any of us learned in college. Even if we'd studied technology, they didn't actually tell you sort of how Oracle might sell software versus someone else like Zoom on a monthly subscription basis. That probably never came up if you studied computer science at LSU and so forth.
So when you were first reaching out to these individuals, how did you make contact? And the reason why I'm curious is because I feel like a lot of entrepreneurs can take a lot of lessons from what you're saying, especially the whole build a relationship first.
Mm-hmm.
And then, if it makes sense, then you can explore doing business together. But the relationship comes first. But how did you initiate that? I mean, did you pick up the phone and give them a call? Did you just stop by their store? What did that actually look like for you?
Yeah. A lot of it was sort of giving people calls, but then also it's good to develop strategic alliances. I mean, I'm a big fan of sort of finding people who maybe have a same sort of prospective client list as yours, but your product doesn't compete with theirs. As a matter of fact, it's kind of complementary. So in my case, when a business only had 1 or 2 people, it didn't have needs for sophisticated accounting software. But if it got to 10, and I'm using this as a direct example of my early days, so 2000 to 2003, as I got my business going, they were then starting to be faced with, I need payroll software. So I realized that didn't compete at all with what I did. As a matter of fact, the payroll system was pretty tied into a retirement plan for a small business, because the way you put money into a retirement plan was as a small percentage deduction from paychecks, which were run through payroll software systems. So identified who the payroll salespeople were in the city of Austin for the big names at the time. They're big Fortune 100 companies, but their sales reps were early 20-somethings like myself. And you would meet them. Sometimes you might even come across them in the lobby waiting to go see the same business owner, but for a different product presentation. And forging alliances with those folks was one. But I've kind of always thought that no one ever, became successful sitting on their couch. So I've always made a point of trying not to eat lunch by yourself in the early days, or sitting at home when you might be able to have a chance to go out. It wasn't just for the sake of networking. I mean, I kind of thought that communicating in general and being comfortable being out and about and meeting and learning from new people was just an important life skill. I didn't think it was networking just for the sake of networking. It was really just genuinely synthesizing and getting exposed to different perspectives, different businesses. And that was always what I did. And it was just a matter of, it was one theme from a book. It was the title of a book I read a long time ago. And I met the author many years after I wrote the book. But the title of the book was just Never Eat Alone. And kind of the same theme. You're never going to sell anything. You're never going to be successful. You're never going to meet anyone if you just don't do anything and hang out by yourself on your couch and so forth. That was his theme.
When you decided to make the transition away from that position,
mm-hmm.
what did that actually look like? What was that final push for you to leave?
Yeah, this is it's an interesting one. So we're gonna flash forward. I worked at Merrill Lynch for a decade, but I started in the year 2000, which was the internet bubble bursting. I briefly referenced earlier the recession that most people remember, which is the credit crisis from 2008. Ironically enough, I survived through it, but my own employer didn't, and was acquired by Bank of America. In September of 2008, they closed that deal, and a pretty famous weekend in U.S. business history still to this day, and probably will be for the next 100 years. But so as I was thinking about the transition, it had a lot to do with, I had a lot of these business owner clients that I was providing a specific investment service. So I was a trusted service provider for this retirement plan, which was investments that were held ultimately by all the team members of small and medium-sized and some large businesses at this point in my my tenure at Merrill Lynch. And the thing that happened when the banking side came in was that I had to make the transition because the banking side was interested in seeing if they could cross-sell business banking services to my customer base. And I kind of viewed it as, it's hard for me to be a trusted advisor for investments, but also be represented by an employer organization who might be trying to cross-sell other services and make different revenue streams. So my team and I, we kind of came at this inflection point. It was 2 years after that there was a trend, and you've probably seen this as well for any financial advisors that might be watching the show, or anyone that knows one, of the financial advisors that work for the big organizations, and they're employees of these big organizations who manufacture financial products, and they're also representing, advice relationships to clients, versus advisors who are not attached to a large organization and can then basically be on the same side of the table and represent clients for the products that are most appropriate and in their best interest. So that was a big fork in 2010. And my team and I decided that for us to properly service the clients, we should probably still try to maintain being on the same side of the table. Now, both sides are still relevant and very big today. I just thought that the way that we had established the relationships, we weren't trying to say that one is right and one's wrong, but the way that when I thought back how I'd gotten these relationships was only representing this one business line. The only way I can keep doing this is if I break away with our team and create it as a standalone business entity and so forth. So that's what we did in 2010. And that was, I guess, the first time I broke away to starting a business and leaving this big company world. But of course, a lot of people know that inside of financial services, you're kind of running your own mini business within that large organization. So I don't try to embellish and say that my leaving was this huge, I decided to completely upend this stable 25-year stint I had at IBM to go build a small software company. I would say that the transition from the industry I was in was you kind of ran your own mini business inside. And so the transition wasn't quite as big a leap to doing it on your own as a independent service provider. So that's the decision making that came in, and it goes back again to putting myself in the perspective of my client base at this time and saying, how did I establish these relationships, these trusted relationships, the people that have worked with me from when they had 4 employees and now they have 4,000 and they're still with me as a service provider? It's not because one day they thought I might be associated with a big bank and I could give them a great corporate treasury, solution. It was basically because, I always sort of was the person who came in and represented to the employee base, maybe what steps they can take in these retirement plans, how much to save, what types of funds to put them in, and so forth. And for me to maintain that, I had to separate from the big banking institution. And it was just that decision had a lot to do with thinking about how I got these clients in the first place and why they're still with me, and so forth. So it had a lot less to do with, I would say, me and the macroeconomic world at that time, and a lot more about, what was my sort of relationship and promise to them at the beginning of these relationships, some of which I'd had for 10 years. So that was how I left to go into that management consulting business, and that was successful. We ran that for many years before selling our stake in it to a larger company, essentially. But you asked specifically about that transition point, and hope that sort of helps to explain to the audience of, maybe you're not always making decisions in that are from your lens, but you really need to think about it from the other person's. And especially if you're in a service type business, it's probably a better lens to look through than your own. Otherwise, you might find yourself with no clients that came over transition.
That is such a powerful philosophy almost of, because it seems like, to my understanding, clearly you're the expert here, but it seems like the distinction was, on one end, I'm with an organization who is manufacturing products, and I'm also trying to represent my clients in the best way possible.
Mm-hmm.
And if I then go off on my own, there's not like the home team products that it's almost like a gimme that are almost always going to be there, but instead it could be more of a, maybe this isn't the right word, but more of like a meritocracy where the best products would be used instead of the home products, and then but the best products, and then you could choose from any number of different products and any number of different product manufacturers.
Sure.
And the most important thing would be that relationship with the client and representing them and doing what's in their best interest.
Exactly. I mean, and if you really think about just products in general, whatever you may use, different products or brands have identities. Like they have a very good brands have a very sort of specific and known target customer base, and it's not always a fit. And I think you have to be objective. There's a reason why there are sites that might aggregate all the airline prices versus going directly to the airline. Because if you and I were trying to fly to Tokyo, it's probably not going to make much sense to be on Southwest Airlines website, for example. As far as they can go is Hawaii, which even for that is only as of a couple months ago. So it's just not a fit.
Right.
So forth.
So when you then made that transition and you're I don't know if rebuilding is the right word, but you're building your own business, and I know you explained that you already had your own business within that organization,
right?
But how did you get to the point where you could then sell your piece of the business and move into the next role? Like, what was that journey like?
Yeah, well, we had a pretty well-established services business and a known client base. And at this point, it was a lot of process and a lot of sort of systems that had been in place. So for me in particular, one of the things I recognized was that it was a business that was limited to the amount of hours that I could put towards it. So the way to grow those types of businesses, so think hourly pay employees. So a lawyer, an accountant, for example, those are based on an hourly rate. So really the only way to increase the revenue stream, because you can't increase the amount of time available, would be to increase the rate per hour. So when you start to extrapolate that out, it wasn't going to be great for me in a services business that was getting more and more competitive, and there was consolidation happening. So if anything, we were going backwards in that current customers, were justified in sort of asking for a lower rate for the same time of services provided. And that was probably going to be okay for 3 years and 5 years and 7 years. But, based on my age at the time, I was basically early mid 30s. I thought, I don't see this being, the case 10 and 15 and 20 years from now, at which point I still, want to be in business. So that's when we started looking at a transition. And for me, that was a transition again to thinking about utilizing some of the things I'd known about the industry that I developed my expertise in. So retirement plans, IRAs, 401ks, and trying to approach it more from a technology perspective, quite frankly. So I'd sold my stake in the practice, and then we ultimately got acquired by a much larger financial services firm. But at this point, I've already transitioned, and then I made a big leap. So this was, there was no playbook that I knew of, at least for me specifically, just completely doing something different, which was going and developing an idea for a product in the financial technology space. And the product itself, I'll just stop here and say, was a mobile phone based starter IRA platform. So I had a lot of people that I knew that it was difficult for them to get started. It's intimidating to try to walk into a branch, even though, the big brands like the Fidelities and the Schwabs have branch offices and typically suburb, downtown, affluent cities in America. I don't think it's really comfortable for a 22-year-old or a 23-year-old to just walk in there after they got their first job, even though they have lobby chairs and stuff. And then it's even more intimidating, if you can even find it, to go to the 11th floor of a downtown office tower and go visit someone at Merrill Lynch or UBS or Morgan Stanley, for example. So I thought that for people to get started, the best accounts if you're young are retirement accounts. I was a retirement plan expert at some point over those years at Merrill in my management consulting. I was a nationally known consultant for doing these. Come up with a product design to where people can do this in a mobile phone and make micro contributions on a weekly basis. Just the quick part there is that I had teamed up with a technical co-founder. We had a pitch deck. We basically talked to some folks about it. We were given $3 million from folks in Silicon Valley to try it. And we got the product up and running. And before raising another round of funding, we also got approached for an acquisition offer. So we sold that company to a financial services, not the one that I started working with. So that would have been a little bit more interesting if I ended up back as an employee of the company I left in 2010, but a competitor of theirs for sure. They wanted to get into the digital sort of transformation age for wealth tech, and they acquired our company. So that was kind of all 22 months of learning how to be a tech entrepreneur. And now what's funny is I think more people now in this city sort of view me as a tech guy, but I like to think of myself as still the career financial advisor type person, not the tech guy.
So today, after having gone through that incredible journey, what's your biggest focus?
So today, that company, it was called Honest Dollar. It was acquired by a New York firm, Goldman Sachs. That was in 2016. And, this time I felt like, okay, I did have a little bit of knowledge in terms of how to start another technology company. You learn something with every new company. And then this time I decided to focus again, staying where my roots were. So this is one of the things I talk about a lot, which is that I don't think it's so appropriate for people just to blindly go into entrepreneurship. I do like that, hey, you spend some time learning about something, but keeping your mind open to maybe seeing things that your employer, your industry, your peers might be missing, and then using those as opportunities to capitalize on it. I always tell people Howard Schultz didn't invent coffee.
Right.
Phil Knight didn't invent shoes. They just figured out a different way to both distribute brand, those products and so forth. And they were uber successful doing this. So for me, I decided this time to stay related to the retirement space. And now I have a platform for a different customer demographic in America, capitalizing on that knowledge. And I'm focused on a company now, a new tech company here that we started in 2008. So we're only about a year and a half in. And now our customer bases are more 40-year-old people that have accumulated some monies in accounts, and then we let them do things that they normally can't invest in. So instead of stocks and bonds, they could buy real estate and maybe go onto an online platform and buy digital currency or invest in a small business and so forth. So using the same rules that I've always adhered to. They were started in 1974, which created IRAs, 401ks. I started in this business in the year 2000. And I'm just combining, I think, some investment opportunities that have been new today as of the last 10 years, but allowing people to do it inside of accounts that have existed now for more than 40 or 50 years. So that's what my main focus is today. And it's always tied back to the story when we started, which was the way that I was able to see these things was growing up and learning, whether consciously knowing this or not at the time, to look through someone else's lens instead of just kind of always having your own bullheaded opinions. And then, by just some weird fork or alternate path of law school being expensive, which I guess it's still that way today, if not more so, putting me down a path of financial services. But instead of working with individuals, the stock market decided to crash pretty hard, making individuals less likely to work with a fast-talking 21-year-old kid, which then caused a lot of people to leave big companies and become entrepreneurs, of which some of your audience members. So I like to think that people deciding that maybe being with the giant corporation for their whole career was also sort of indirectly beneficial to me and how I got started in business. And I think that my best way to contribute to society is to build businesses and be an entrepreneur and not think about going back and working for a 100,000 employee company and so forth. I didn't go with my last company that got acquired. So I stayed on my own.
Henry,
next door to the Black Panther conference room.
Well, Henry, first of all, if they ever have an Avenger for finances, that should definitely be you. And but I want to thank you very, very much for coming on the show, and I want to be very respectful of your time.
Sure.
So thank you for sharing your journey. Seems like you've had an incredible ride, a really powerful story that you've lived. So I'm grateful that you share it.
Sure.
And I do have one more question for you, then we'll wrap it on up.
Sure.
But what question should I be asking you that I just wouldn't think to ask?
People ask me that, are you going to stop? Is this kind of what you like doing? And I always tell people that, I don't know, I've always worked with retirement accounts. So my whole career has been based on getting people to a point where they can quote unquote stop working. But for me, I always look at sort of the end of the road as maybe that's when I finally go back and pursue that other alternate path and get educated in law and finally start to learn some of these rules that I started the conversation with. And people ask me a lot, like, what's the end game for you? And I kind of think about it as learning. I like it. And then I've also seen that maybe if you stop doing that, that's when you actually do get old. Old isn't defined by age. Old is defined by maybe stepping away from too many things and not having a reason. Not having something to get fired up about every day. So right now I'm very fired up about the project I'm working on today, and hopefully it helps a lot of people unlock their monies and quite frankly, actually even use it to possibly invest in the next generation of entrepreneurs. So that's one of the things I'm really proud of with what we do today. People can invest in businesses with their money directly. So that's kind of cool. It's another sort of coming full circle in the entrepreneur ecosystem. I think.
That's amazing.
Yeah.
Again, Henry, I want to thank you so much for coming on the show today. Thank you very, very much
Yeah.
for your time. Thank you.
Thank you. All right. Thanks, Ben. I appreciate it. All right. Bye-bye.
Absolutely. And, to everybody who's watching and listening also, I want to say thank you all very much. And I will see everybody on the next episode. Take care.